School of Management Studies IGNOU presents an audiobook on the course MMPC 004 Accounting for Managers for MBA program. Presenting Block 1 Accounting and Overview, Unit-1 Introduction to Accounting, Part-1.
After completing this unit, you should be able to understand nature and role of accounting, meaning and objectives of accounting, different branches of accounting, users of accounting information, and the basic accounting concepts, principles, and conventions.
Introduction.
Accounting is often called the language of business. The basic function of any language is to serve as a means of communication. In this context, the purpose of accounting is to communicate or report the results of business operations and its various aspects. Accounting has been defined in various ways. According to one commonly accepted definition, accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are, in part at least, of financial character and interpreting the results thereof. Another definition, which is less restrictive, interprets accounting as the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by the users of information. Objectives and scope of accounting. The main objectives of accounting are: Number 1. To maintain a systematic record of business transactions. Accounting is prepared to maintain a systematic record of all the financial transactions or monetary transactions in a book of accounts. For this purpose, all the transactions are recorded in chronological order in journal and then posted to principal book, that is ledger and trial balance. Number 2. To ascertain profit and loss. Every businessman is curious to know the net results of business operations periodically. In order to find out whether the business has earned profits or incurred losses, we prepare a profit and loss account. Number 3. To determine the financial position. Another important objective is to determine the financial position of the business to check the value of assets and liabilities. For this purpose, we prepare a balance sheet. Number 4. To provide information to various users. The most important objectives of accounting is to provide information to the various interested parties or stakeholders. The information provided by accounts help them in making good financial decisions. And number 5. To assist the management. By analyzing financial data and providing interpretations in the form of reports, accounting assists management in handling business operations effectively. Data creation and collection. It is the area which provides raw material for accounting. The data collected is historic in the sense that it refers to events which have already taken place. Earlier, accounting was largely concerned with what had happened rather than making any attempt to predict and prepare for the future. After the historic data has been collected, it is recorded in accordance with generally accepted accounting theory. A large number of transactions or events have to be entered in the books of original entry called journals and ledgers in accordance with the classification scheme already decided upon. The recording and processing of information usually accounts for a substantial part of total accounting work. This type of activity of accounting may be called recordative. The processing method employed for recording may be manual, mechanical, or electronic. Computers are used widely in modern business for doing this job. Data evaluation. It is regarded as the most important activity in accounting these days. Evaluation of data includes controlling the activities of business with the help of budgets and standard cost, that is budgetary control, evaluating the performance of business, analyzing the flow of funds, and analyzing the accounting information for decision-making purposes by choosing among alternative courses of action. The analytical and interpretative work of accounting may be for internal or external uses and may range from snap answers to elaborate reports produced by extensive research. Capital project analysis, financial forecast, budgetary projections, and analysis for reorganization, takeover, or merger often lead to research-based reports. Data evaluation has another dimension, and this can be known as the auditive work, which focuses on verification of transactions as entered in the books of account and authentication of financial statements. This work is done by public professional accountants. However, it has become common these days for even medium-sized organizations to engage internal auditors to keep a continuous watch over financial flows and review the operation of the financial system. Data reporting. It consists of two parts, external and internal. External reporting refers to the communication of financial information like earnings, financial and funds position about the business to outside parties. For example, shareholders, government agencies, and regulatory bodies of the government. Internal reporting is concerned with the communication of results of financial analysis and evaluation to management for decision-making purposes. The central purpose of accounting is to make possible the periodic matching of costs, that is efforts, and revenues, that is accomplishments. This concept is the nucleus of accounting theory. However, accounting is moving away from its traditional procedure-based record-keeping function to the adoption of a role which emphasizes its social importance. Definition of accounting. Accounting can be defined as a process of reporting, recording, interpreting, and summarizing economic data. The introduction of accounting helps the decision makers of a company to make effective choices by providing information on the financial status of the business. Accounting is a system which identifies the transaction, record those transactions of a business organization in a way that can be compared with the other business as well as within the business with the past performance. Accounting is a part of our daily life. For a person, most common use of accounting is to check accounts, tax forms, payroll, or any credit taken. All these experiences focus on record-keeping part of accounting. Nowadays, due to advancement of technology, the recording part is done with the help of technology, but still the analysis is done by human minds, thus understanding the various concepts of accounting which are important. The American Institute of Certified Public Accountants, AICPA, had defined accounting as the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part at least of financial character and interpreting the results thereof. As per Robert N. Anthony, accounting system is a means of collecting, summarizing, analyzing, and reporting in monetary terms information about the business. To understand accounting efficiently, it is important to understand the various aspects of accounting. Number 1. Economic events. Economic events are those which are a result of a consequence of a monetary transaction which company has to undergo during its lifetime, such as purchasing new machinery, transportation, machine installation on site, etc. Number 2. Identification, measurement, recording, and communication. The purpose of accounting system should be elaborated in such a way that the right data is identified, measured, recorded, and communicated to the right individual and at the right time. Number 3. Organization. It refers to the size of business and the types of activities. Assets. Assets are those resources owned by organization which help the company to earn profit. The economic value of an item which is possessed by the enterprise is referred to as assets. For example, plant and machinery, furniture and fittings, land and buildings, books, computers, motor vehicles, etc. Assets can be tangible, which can be seen or touched, and intangible, for example, goodwill, patent, etc. Number 5. Liabilities. The economic value of an obligation or debt that is payable by the enterprise to other establishment or individual is referred to as liability. In other words, liabilities are the obligations or responsibility that are arising out of previous transactions which are payable by the enterprise through the assets possessed by the enterprise. Liabilities can be classified as fixed and current. For example, outstanding expenses, debentures, loans from banks and financial institutions. Next is owner's equity. Owner's equity is one of the 3 vital segments of a sole proprietorship's balance sheet and one of the main aspects of the accounting equation. In short, we can say that assets equals to liabilities plus owner's equity. It represents the owner's investment, that is capital, in the trade minus the owner's withdrawal from the trade, that is drawings, plus the net income since the business concern commenced. Steps in accounting cycle. Certain attributes or characteristics can be drawn from the definition of accounting. They are: Number 1. Identifying financial transactions and events. Only those transactions and events which are of financial nature, and therefore, first of all, such transactions and events are identified. Number 2. Measuring the transactions. The transactions and events are measured in terms of money, which is considered as a common unit. Number 3. Recording of transactions. Accounting involves recording the financial transactions in appropriate books of accounts such as journal or subsidiary books. Number 4. Classifying the transactions. Transactions recorded in the books of original entry, that is journal or subsidiary books, are classified and grouped according to nature and posted in separate accounts known as ledger accounts. Number 5. Summarizing the transactions. It involves presenting the classified data in a manner and in the form of statements which are understandable by the users. It includes trial balance, trading account, profit and loss account, and balance sheet. Number 6. Analyzing and interpreting financial data. Results of the business are analyzed and interpreted so that users of financial statements can make a meaningful and sound judgment. Number 7. Communicating the financial data or reports to the users. Communicating the financial data to the users on time is the final step of accounting so that they can make appropriate decisions. It not only records, classifies and summarizes the business data but also analyzes and interprets the results for the future decisions. Bookkeeping versus accounting. Bookkeeping. It is a component of accounting that involves the process of identifying the financial transactions, measuring, recording and classifying those transactions that have occurred in the course of business. Accounting. Accounting begins where bookkeeping ends. It is a wider concept and includes summarizing, interpreting and communicating the financial data to the users of financial statements. Accountancy. Accountancy refers to systematic knowledge of the accounting principles and techniques. Systems of accounting. There are 2 systems of recording transactions in the books of account. Number 1, double entry system, and number 2, single entry system. Double entry system. The double entry system is based on the dual aspect principle. Every transaction has two aspects, a debit and a credit of an equal amount. This system of accounting recognizes and records both aspects of the transaction. Minimum two accounts are involved in it, and the accounting equation should not be violated. Single entry system. Under this system, both aspects are not recorded for all the transactions. Either only one aspect is recorded or both the aspects are not recorded for all the transactions. Advantages of the double entry system of accounting. There are many merits of the double entry system of accounting. They are: number 1, scientific system. As compared to the single entry system, this system is more scientific and is useful to achieve the objective of accounting. Number 2, a complete record of the transaction. Since both the aspects of transactions are considered, thus there is a complete recording of each and every transaction. Using these records, one can compute profit or loss easily. Number 3, checks arithmetical accuracy of accounts. Under this system, one can check the arithmetical accuracy of the records by preparing a trial balance. Number 4, determination of profit or loss and depiction of financial position. Under this system, one gets to know about the profit earned or loss incurred by preparing profit and loss account. By preparing the balance sheet, the financial position of the business can be ascertained. That is, position of assets and liabilities is depicted. Number 5, helpful in decision making. Under the double entry system of accounting, administration and management are able to take decisions on the basis of factual information. Applications of accounting. The main applications of accounting are: number 1, provides information about financial performance. Accounting provides factual information about the financial performance of an enterprise during a given time period. It provides information like profit earned or loss incurred over a period of time through profit and loss statement and financial position through balance sheet at a particular point of time. Number 2, provide assistance to management. Accounting also assists the management in business planning, decision making, and in exercising control by providing financial information in the form of reports. Number 3, facilitates comparative study. Accounting helps in making a comparison by keeping a systematic records and preparation of reports at regular intervals. Number 4, helps in settlement of tax liability. Systematic accounting records further help in settlement of various tax liabilities such as income tax, GST, etc. Number 5, helpful in raising loan. On the basis of appraisal of the financial statement of the firm, banks and financial institutions grant a loan to the firm. Number 6, helpful in decision making. Accounting also provides useful information to the management for taking vital decisions. Number 7, substitute of human memory. Since it is difficult for a human being to remember all the transactions of the business, accounting serves as a substitute of human memory by recording all the transactions and keep all information handy as and when required. Number 8, helps in the valuation of business. In case of the shutdown and dissolution of business, accounting helps the businessman to determine the value of business, otherwise it is not possible to determine value of business. Limitations. The limitations of accounting are: number 1, accounting is not precise. Accounting is often subjected to personal bias or judgment. Number 2, accounting is done on historic value of assets. Accounting records assets at their historical cost less depreciation and does not reflect their current market value. Number 3, ignore the effect of price level changes. Accounting statements are prepared at historical cost and thus ignore the changes in the value of money. Number 4, ignore the qualitative information. Accounting ignores the qualitative aspect as it records only monetary transactions. Number 5, affected by window dressing. Window dressing means manipulation in accounting in order to present a more favorable position of the business than the actual position. Qualitative characteristics of accounting information. Qualitative characteristics are the attributes of accounting information which enhance its understanding ability and usefulness. Reliability. Reliability means that the information must be free from material error and personal bias. Unless the information is reliable, the accounting records cannot be prepared accurately. Relevance. To be useful, accounting information must be relevant to the decision-making requirements of the users. Understandability. Information should be disclosed in financial statements in such a manner that these are easily understandable. Comparability. Both intra-firm and inter-firm comparison must be possible over different time periods. That is, the performance of company can be compared with its previous performance and with other companies also. Accounting as an information system. While discussing the scope of accounting, you must have observed that accounting involves a series of activities linked with each other, beginning with the collecting, recording, analyzing, and evaluating the data, and finally communicating information to its users. Information has no meaning unless it is linked with a certain purpose. Accounting as a social science can be viewed as an information system since it has all the features of a system. It has its inputs, that is raw data, processes, that is men and equipment, and outputs, that is reports and information. If we consider accounting as an information system, then we are in a position to make some important observations. First, the goal of the system is to provide information which meets the needs of its users. If we can correctly identify the needs of the users, we are then able to specify the nature and character of the outputs of the system. Secondly, it is the output requirements that determine the type of data which would be selected as the inputs for processing into information output. There are several groups of people who have a stake in a business organization: managers, shareholders, creditors, employees, customers, etc. Additionally, the community at large has economic and social interest in the activities of such organizations. This interest is expressed at the national level by the concern of government in various aspects of the firm's activities, such as their economic well-being, their contribution to welfare, their part in the growth of the national product, etc. We shall now briefly discuss what the information needs of various users are. Number 1. Shareholders and investors. Since shareholders and other investors have invested their wealth in a business enterprise, they are interested in knowing periodically about the profitability of the enterprise, the soundness of their investment, and the growth prospects of the enterprise. Historically, business accounting was developed to supply information to those who had invested their funds in business enterprises. Number 2. Creditors. Creditors may be short-term or long-term lenders. Short-term creditors include suppliers of materials, goods or services. They are normally known as trade creditors. Long-term creditors are those who have lent money for a long period, usually in the form of secured loans. The main concern of the creditors is focused on the credit worthiness of the firms and its ability to meet its financial obligations. They are therefore concerned with the liquidity of the firms, its profitability, and financial soundness. In other words, it can also be stated that creditors are interested mainly in information which deals with solvency, liquidity, and profitability so that they could assess the financial standing of the firms. Number 3. Employees. The view that business organizations exist to maximize the return to shareholders has been undergoing change as a result of social changes. A broader view is taken today of economic and social role of management. The importance of harmonious industrial relations between management and employees cannot be overemphasized. That the employees have a stake in the outcomes of several managerial decisions is recognized. Greater emphasis on industrial democracy through employee participation in management decisions has important implications for the supply of information to employees. Matters like settlement of wages, bonus, and profit sharing rest on adequate disclosure of relevant facts. Number 4. Government. In a mixed economy, it is considered to be the responsibility of the government to direct the operation of the economic system in such a manner that it subserves the common good. Controls and regulations on the operations of private sector enterprises are the hallmark of mixed economy. Several government agencies collect information about various aspects of the activities of business organizations. Much of this information is a direct output of the accounting system. Levels of outputs, profits, investments, costs and taxes, etc. All this information is very important in evolving policies for managing the economy. The task of the government in managing the industrial economy of the country is facilitated if accounting information is presented as far as possible in a uniform manner. It is clear that if accounting information is distorted due to manipulations and window dressing in the presentation of annual accounts, it will have ill effects on the measures the government intends to take and the policies it wishes to adopt. Number 5. Management. Organizations may or may not exist for the sole purpose of profit. However, information needs of the managers of both kinds of organizations are almost the same, because the managerial process, that is, planning, organizing and controlling, is the same. All these functions have one thing in common, and it is that they are all concerned with making decisions which have their own specific information requirements. The emphasis on efficient and effective management of organization has considerably extended the demand for accounting information. The role of accounting as far as management is concerned was highlighted earlier when we talked about management accounting. And lastly, consumers and others. Consumers organizations, media, welfare organizations and public at large are also interested in condensed accounting information in order to appraise the efficiency and social role of the enterprises in different sectors of the economy. That is, what levels of profits and outputs are being achieved, in what way the social responsibility is being discharged, and in what manner the growth is being planned by the enterprises in accordance with the national priorities, etc. All this discussion perhaps has indicated to you that the information needs of the various users may not necessarily be the same. Sometimes they may even conflict and compete with each other. In any case, the objective of accounting information is to enable information users to make optimum decisions. Nature of accounting function. Accounting is a service function. The chief accounting executive, by whatever name he is called, holds a staff position except within his own department where he exerts authority. This is in contradistinction to the roles played by production or marketing executives who hold line authority. The role of the accountant is advisory in character. He works through the authority of the chief executive. The accounts or finance department don't exercise direct authority over line departments. In decentralized structure with a number of units and divisions, the accounting executive, however, exercises what is known as the functional authority over all the accounting staff deployed in different segments. There are two facets to the role of the accountant. For the top managers, he works as a watchdog, and for middle and lower level managers, he acts as a helper. The watchdog role is usually performed through scorekeeping task of accounting and reporting to all levels of management. The helper role is usually performed through the task of directing managers' attention to problems and assisting them in solving problems. Mutual understanding and rapport between the accountant and the manager in the task of attention directing and problem solving can be enhanced if accountant and his staff frequently interact with the line managers and guide them in matters concerned with preparation of budgets and control documents with which they might not be conversant. This will instill confidence among line managers regarding the reliability of reports.
We were listening to the audiobook by the School of Management Studies IGNOU for MBA program course code MMPC 004 Accounting for Managers. Course Coordinator Professor Kamal Bagrecha, School of Management Studies IGNOU. Voiceover by Harpreet Kaur. Edited by Ruchi Sharma. Program assisted by Tarannum Jahan and Jagbandhu Jana. Program produced by Dr. Manoj Kumar Singh. This program was brought to you by Electronic Media Production Center of Indira Gandhi National Open University.